Good morning. This is Rich Nelson. This is August 14th here, filling in for Steve Georgia, who's out here for the day. As far as news for the day, in general, I can note the U.S. dollar is down about 3 here today, kind of quiet as far as outside fundamentals. Looks like crude oil up about 21 cents. Of other notice here, CRB index, which represents 19 separate commodities, still showing its general downtrend still intact. In fact, it did hit brand new lows yesterday here for this current downtrend. And in terms of CRB index, this is still the lowest since late 2003. So we still have this overall commodity pressure here riding into us on grains here. Now in terms of news on weather, no real main updates here. Extended forecast here for mid to late next week still shows in general normal to below normal temps for the western Corn Belt. Still warm in the east, but all areas still seeing above normal rainfall. That will alleviate some of the concerns about this week's dryness that have been seen here. In terms of news on grains, specifically here, looks like the overnight Chinese corn sale still finding very weak interest in their high-priced government-owned corn. The French corn crop pointing out 55% good to excellent for this latest crop progress report. That's down from the previous week's 58%. So still pressure still showing up on their crop as they still deal with the heat here in the past couple months. As far as soybeans, down 11 cents in the last quote on the electronic session here. We do have this NOPA crush report, which will be out on Monday. This one will be closely followed. The average guess right now is 141.475 million bushels. That, in fact, be very strong, 18% over last year. As far as the numbers here for the month of June, which we reported 1 month ago, those are about 20% higher than last year. So we're still going to finish out the year on a very strong note for crush. And the question right now is whether USDA will need to raise its crush estimate again. And we've kind of computed the numbers here for August, which, of course, won't be talked about on Monday's report. But to wrap up the marketing year with August, we only need to be 13% higher than last year to meet USDA's numbers on whole year crush. So it does look like there's still yet another adjustment higher needed for domestic crush when it's all said and done. In terms of wheat, last trade down about 2 cents here. News is kind of quiet on today's wheat trade. Looks like the French wheat crop itself was reported at 99% harvested. Now, while things may be kind of quiet here regarding grain fundamentals for today, there's actually a lot lined up for next week. Number one, we are starting Allendale's 2-week annual nationwide producer survey. This one runs next week as well as the week after, and we will release results here on Monday or Tuesday of the following week. So this is going to be very interesting and very important for us to follow. Also, we do have one of our competitors, I believe Pro Farmer, has their crop tour that typically runs for a few days with, of course, a daily estimates out each day, giving what's generally a bullish viewpoint almost on those Monday through Thursday updates. Then the last day of the survey, typically we find a nationwide yield number which is larger than the trade had previously expected here. So as far as that goes, Allendale's nationwide producer survey starts on Monday. Number two, Pro Farmer's crop tour, they start theirs on Monday as well. Looks like the FSA, the release of that insurance data, will finally be out here, the first release of this year, out on Monday as well. Now keep in mind, much of the trade does not feel that this August release will hold much brand new information. Typically, it's a starter report here. The real exciting ones really get going in September and October. And of course, like I said, we got NOPA lined up Monday at 11 o'clock Central as well. Over on livestock side, looks like kind of a muted tone as well. Last trades on the cattle futures down about 35 cents on the current session here. We've plugged in here with about 110,000 head for today's kill, 2,000 head here for tomorrow. Looks like the week's run will be about 541,000 head. That's about 7% under last year, but does fit into the pace we've seen in recent weeks. So no main changes going on the supply side for cattle. One thing we can look at as far as demand issue here, wholesale beef this week so far up $8.75 for choice, select up $4.99. So certainly we should see some wrapping up week sales for the week on the cattle side here. Certainly higher will be the tone seen. In terms of hogs, looks like a 12-cent higher trade here today with a 405 plugged in for today's run on kills, 110,000 for Saturday. We compute the week's kill at about 2.216 million head. That's about 10% higher than last year. And that percent does kind of fit in with what we've seen in recent weeks. More important for us is we are now starting the transition away from low summer supplies into very large winter supplies. And this week actually represents the first real week of pushing away from that low summer period. In fact, this 2.2 million head kill, this is going to be the biggest since April. So we are seeing the supply issues line up here. And one thing that trade's been very happy to see so far is cash hogs have not had this major break yet, based on this larger supply. In other news, we also have the August lean hog index, or the August lean hog contract will be expiring today at noon. So we'll have that going on. We don't typically see much of a market movement off this information. So the general tone for grain today looks like slightly lower on some kind of light news. We'll have a lot of stuff to talk about Monday, Tuesday next week. As far as livestock, looks like it'll be trading mixed here today. If you have any questions about this or markets in general, give Allendale a call, 1-800-262-7538.